Hello, everyone, and thank you for joining today. My name is Oscar, and it is my honor and pleasure to welcome you to our very first fireside chat today. So this event will kick off a series of fireside chats that are focused on alternative paths to entrepreneurship. We're excited and gratified by the overwhelming response we've received. There are almost 100 participants that have signed up from over 20 countries. So we are very happy that so many people joined us today from Germany, we have France, Switzerland, Singapore, even US, and many more. So based on this strong interest, we are encouraged to do more events on these topics. So if you yourself are a searcher, or if you would like to be a searcher, you can get in contact with us. There will be some reading material on our LinkedIn, on our Instagram, and we also strongly recommend the website Search Funder. So also you can follow us on Instagram at risingstars.81. That is risingstars.81 to see all our future events and resources. So today we will focus on entrepreneurship through acquisition and have invited a few experts to speak about this topic. We'll speak about the idea of being an entrepreneur, the different paths of becoming an entrepreneur, and we will also cover the fundamentals of entrepreneurship through acquisition. So the program today will be split into 3 parts. First, Samir Narula will share his insights and talk about the fundamentals in the keynote. And in the next section, we'll have the opportunity to listen to the stories of 2 individuals who have gained tremendous experience in the world of entrepreneurship through acquisition. So finally, we will round it up with the event was a Q&A section, and please feel free to write your questions into the chat during the event. So now I'll briefly introduce Samir Narula, who will give us a keynote on this topic. Samir has over 20 years of experience within the technology industry as an entrepreneur, management consulting, and investor. He's a founding partner and managing director of AugustOne, and has a degree in electrical engineering from the University of Virginia, and also attended the University of Columbia and HEC in Paris. And he is here today to share his insights into entrepreneurship through acquisition. Thank you, Samir.
Great, thank you, Oscar, and welcome everyone. It's quite a pleasure to be here, and thanks Marat and Tomas for joining as well. Valentin, let me know if you need me to pause or speak off screen so that you can let in additional attendees. Otherwise, I'll just continue. Just to introduce AugustOne, many of you might know of us. Some of you are meeting us for the first time. We are a regulated fund manager out of Singapore, but effectively we are a multifamily office. What that means is we invest in venture capital, but we also invest in other asset classes. And our purpose is really to help individuals, families, and companies live up to their potential. And the way we do that is by investing in technologies that can transform businesses. But also this area that we're discussing today is very pertinent because entrepreneurship through acquisition is a very important area for us. In fact, it's a major focus for us in 2020, 2021 going forward. So I'm quite excited to speak with all of you. And this was supposed to be a chat, fireside chat. We weren't expecting so many people to sign up from around the world. So unfortunately, we won't be able to do a one-on-one right now. But of course, we'll do follow-up events as Oscar mentioned, and we'll all be available later on for conversations if you can reach out to us. So with that, and these are my colleagues on the screen. We are a more diverse team than you see here. I think we have to add more pictures the next time. But we'll go on to what an entrepreneur is. Valentin, next one. Yeah, so what is an entrepreneur? Typically, when we think of an entrepreneur, the image that comes to mind is Jeff Bezos or Jack Ma or Steve Jobs or and so on and so forth. And this is sort of an image of a alpha aggressive person who either invents or uses a disruptive technology to change an entire industry. And a lot of times the mindset has been set because of Silicon Valley and the way Silicon Valley and venture capital and the last 20 years really have defined what we think of as an entrepreneur. But when we actually think about it as an entrepreneur is someone who sees an opportunity or sees a gap in the market or sees a need. And the need might not just be in the market, might be their need to make sure that they have enough cash flow to live their lives, and they know how to do it maybe better, faster, or more efficiently than someone else. And our concept of entrepreneurship in the modern era really starts after World War I and World War II, when there was a major shift in the way European craftsmen and artists really sold their products, because royal patronage was gone. And a lot of these craftsmen's shops became small businesses to begin with. And these businesses then grew into the Mittelständler that they call in Germany, or the SMEs or PMEs in France. And some of these became much larger and became the Faber-Castells of the world, or the Porsches of the world, or so on and so forth. And their businesses changed and they became conglomerates because people trusted their brands. They trusted their quality, and they trusted the fact that if you bought something from this particular craftsman's shop or workshop, which had now become a factory or a company, you could trust what they were selling to you. And this is how effectively the entrepreneurs after World War I started off. And a lot of factors came together, and these are important. So some of the factors that came together were demographics. So people were young, they had just come out of the war. There was a need to rebuild economies, and entire colonies were becoming democracies. So there was a globalization going on. There was a young workforce. There were new technologies coming to the fore, like production and automation was coming to the fore for the first time. And finally, capital. So markets were integrating, cost of capital was going down. People were able to access banks and government resources to build up companies. So that's what happened about, I would say, 70, 80 years ago, that started the whole concept of entrepreneurship. And fast forward to the 80s and 90s and 70s, and suddenly risk capital again was available. There were again younger people in the West who were the baby boomers, if you will, who were coming to the fore and building businesses. Now, if you move ahead to our time, 2020 and post 2020, we're in a situation where there is a massive number of these baby boomers who are retiring. So by some measures, 10,000 baby boomers retire every day. And 43% of these, or 43% of the baby boomers who own businesses that are retiring don't have a succession plan. So there's a situation where you've got these businesses that a lot of times are in traditional industries, whether it's cleaning or in manufacturing or in FMCG, or they're making iconic brands and so on and so forth, which were cutting edge technology businesses back in the day. But today, and they had these entrepreneurial leaders who are in their 20s and 30s and 40s, who are now in their 70s and 80s, who are retiring, and they don't have a next generation to take over the business, or their next generation is not willing to be in the businesses that they are in, because these are not glamorous businesses, and they're not in cities like New York, Tokyo, Paris, so on and so forth. These are in smaller cities like Lyon or in Bruges, or so on and so forth. So we're starting to see a major shift in the mindset, and the type of entrepreneurs that are coming out are, of course, there are people who want to build companies, but there are entrepreneurs coming out and saying, look, we want to do something that makes a key shift in the industries we work with, but we want to do this in various different ways. So an entrepreneur, really, the way we define it, is not just someone who starts a business, is funded by a VC and takes it through a series A, B, C, or whatever have you, and takes it to an IPO. An entrepreneur is also someone who starts a business because they see a need in a fundamental industry, and they grow it in a profitable manner without needing external capital, or when they need external capital, they take it for strategic reasons. So that's how we define as an entrepreneur. We define an entrepreneur, and that's really the theme of this conversation today.
Great.
Valentine,
Thanks for sharing your insights of what an entrepreneur is, Samir. Could you tell us a little bit what the different paths are to become an entrepreneur?
Yeah, Oscar, thank you. So as we said, there are different paths and different ways and different definitions of what an entrepreneur is. The first one, of course, is what we talked about, which is build. So you have an idea, or you have the network, or you've got the skills in a certain industry, and you feel that a new solution to a problem is needed, or a new product is needed for a market. And you go out, you build the product, you acquire the team, you build the network that you need to bring this product to market or service to market. You raise the funding. So this is the traditional model, that what we call traditional today. And this has really been brought about because of a vibrant ecosystem of investors, of engineering schools, of the risk-taking ability of individuals. So 20 years ago, if you wanted to start a business, you were an outlier. Today, starting a business as an entrepreneur is almost glamorized to an extent where people will help you put a business plan together. They will incubate you. They will give you technology. They will give you services. They'll do everything for you. And in fact, there are bankers who come and raise money for you. So there is that path, but then the expectations get aligned in a manner that the investor who's putting money into your business expects a 10x return within the next 5 to 6 years. So you're really building to sell, or you're building so that you can optimize valuation, not necessarily value. Now, these are aligned in the best businesses, but really the narrative when people congratulate you on raising money or on IPOing your business is unusual. Because when you raise money, it means you've given up a portion of your business and you've taken on liabilities or responsibility to build this business. Whereas traditionally, the way you would be congratulated would be you're a profitable business, or your customers love you, or you've gotten to a point where you don't need external capital and you're a very, very sustainable and scalable business. So that's one model, which is building, which I'm sure a lot of you are familiar with all the general narrative on television or online and so on and so forth. The second way is something that actually came out of universities and research centers and larger corporates, whether they are Zaibatsus or Kairitsus in Japan or chaebols in Korea or large conglomerates in Europe or the US, where larger companies would effectively spin out or create other smaller companies that would leverage their technology, that would leverage their teams, and that would work with them on market access. And this partnership model really is an excellent model. It's very successful. The challenge here being that your interests have to be strategically aligned to your corporate parent. And there are many, many examples where it works extremely well. And there are others where the stakeholders in the business that's created are not necessarily always aligned with the larger parent. So these are the two dominant entrepreneurship models that we've seen over the years. A third model, which actually has existed forever, but was popularized in the 1980s through some work that was done at Stanford, and then eventually at Chicago and at Harvard, and now very, very actively in Europe, and starting to be a very effective model in Asia as well, is entrepreneurship through acquisition, which is our conversation of the day. So entrepreneurship acquisition is actually exactly what it sounds like. It's effectively a way for individuals who have strong management skills and leadership skills, but they don't necessarily have an idea of what they want to build, or they don't necessarily want to go through the process of first building the product, then forming a company, then actually going and forming the back office support systems, raising money, and then going and launching the product in the market. For them to be able to buy into a business that was created by what we talked about earlier, by someone who's either retiring or a corporate that wants to sell out a division of their business, and be able to take a product and a profitable business. The key here being most of the businesses that entrepreneurs through acquisition acquire are businesses that are enduringly profitable. And these are businesses that have been around for a long period of time. They've weathered ups and downs. They're typically not in a market which would be disrupted easily by technology or by regulation. And you would acquire these businesses by various different models, but through the support of external investors and banks and the seller themselves, and be able to actually take these businesses forward and tweak them and adjust them and improve them from the perspective of perhaps capital structure, corporate governance, some technologies and so on, which we can go into a little more. But the third model, the first model being the traditional model that we all know, which is you have an idea, you form a team, you incorporate a company, you raise money, and you build that up. The second one being you work with a corporate partner or a research partner or a larger partner to take a portion of what they've built and strategically create a spin out of sorts. And the third one being entrepreneurship through acquisition, which my colleagues on the call today will speak a little more about their own experiences. But it's typically focused on small and medium enterprises, which we'll go into a little bit. But this is taking an existing business that is profitable and viable and injecting entrepreneurship and injecting innovation into it through your own efforts and taking it forward. So those are the three models that we talk about today.
Fantastic. Would you mind to go deeper and tell us why entrepreneurship through acquisition offers so many opportunities today?
Yeah, absolutely. So I think, as I started mentioning earlier, there is a large portion of the developed world is aging and they're retiring. And a large number of entrepreneurs who had built businesses in the 60s, 70s, 80s are now getting to an age where they need to pass the baton on. And a lot of times they don't have a next generation. And as I mentioned, about 10,000 baby boomers retire every year, not every day. Not all of them have businesses, but those who do are also part of a generation where they built these businesses in second-tier cities, or they built them in traditional industries. And to pass the baton on, they have management, and these are small companies. Typically, I think there's about 23.5 million SMEs in Europe alone. And of these, they are about 15 times as many small and medium businesses are available for transaction today as businesses over 100 million euros. So there's a huge supply of these companies. On the other side, there is a lot of capital that's chasing deals, but most of the private equity funds that are investing money in traditional businesses like deals that are over 50 to 100 million euros because of the nature of the industry and the nature of fees and the nature of carry and economies of scale. Whereas on the lower side of the segment, which is the venture capital side, most VCs need to have a portfolio diversified approach, and they need to invest in companies that are going to follow what they call a hockey stick curve, where you invest money up front and then these things will follow. They have to give them a 10x, 20x return over 4 to 5 years. Whereas these traditional businesses that were started by this baby boomer generation are typically in areas where they do, let's say, up to 10 to 50 million euros of revenues. They do about 20% of EBITDA, 10 to 20% of EBITDA. And these are businesses that are usually in second-tier cities where it's not easy to get high-quality talent. Although having said that, with the scenario we are in today, we believe there's going to be a strong interest from highly skilled, very entrepreneurial individuals in their, we would say, in their 30s and 40s, who are at a point where they're willing to live in smaller cities and have a higher quality of life, and not live in the dense cities that we have the interest that's been there before in the millennial and Gen X and perhaps in the Gen Z generation going forward. So the opportunity really exists because of a few things that have come together. One, we have people retiring who own businesses. Second, you've got technologies that have transformed some of these industries. So digital marketing, online sales, CRM systems, very basic things. We're not talking about AI, ML, and so on and so forth. I mean, there's a company we looked at in Switzerland that was founded in 1939. They make fragrances and flavors. The company does 10 million to 12 million euros of revenues. They do about 20 to 30% EBITDA. They have 10 employees and they have zero debt. But their website was built, I believe, in 2004. They don't have a foreign presence. And for them, going international means going from German-speaking Switzerland to Germany. So these are businesses that haven't lived up to their potential because the founding families were happy with what they have, and we respect that. But there is a time to maintain the legacy, but bring in entrepreneurs who will take the legacy forward by changing the traditions. So the thought process here is that there are these businesses available. Transformations are happening because of the retirement of the old guard, new technologies coming in, access to cheap capital. I mean, this is the first time that we've seen in a long, long time where access to capital, both as loans from banks, as equity, but also from grants from governments, is probably the most convenient that we've ever seen it. And this is partially also because governments are realizing that you need to support local companies and keep jobs local. So there is an opportunity for people to buy into entrepreneurship, if you will. And that's where we see the real opportunity coming in. Now, the other aspect that's really interesting here is that sustainability is a key measure of the success of a business, especially in developed countries. And our focus tends to be developed countries, especially because interest rates are lower and because the developed countries have a demographic shift, whereas in developing countries, typically there's enough in terms of nephews and nieces and brothers and sisters and so on to take over the business. But in developed countries, because of the way the population growth has gone, there is a break in succession. The other aspect that we like about this industry, entrepreneurship through acquisition, is the fact that the multiples on these companies are lower. So if you go to a company below 50 million euros of revenues, the multiples are typically anything between 4 to 6 to 7 times EBITDA. Whereas with larger companies, what we're seeing is transactions happen between 9.5 to 16 times EBITDA. But let's very quickly talk about how an entrepreneurship through acquisition would work. So I'll give you a metaphor. Let's say you're working at a P&G or at a Unilever or at a Mercedes or whatever, and you've been in the business for 5, 6, 7 years. You have an MBA, you don't have an MBA, you're getting to be in your early 30s, mid 30s, early 40s. And you say, look, I don't really want to go and start a business and spend the next 5 years working 24 hours a day and trying to raise money for most of the time rather than actually building my business. At the same time, I don't want to go join a Google or an Amazon or an Uber. And nothing wrong with those businesses, but you're at a point where you say, look, I now have the management skills. I understand the market. I have a little bit of a network. I've got skills clearly, and I have capital, but I don't have all the capital to be able to go buy a business. So that's the point at which you say, okay, but I want to buy a business because I can see these opportunities. How do I buy a business? So there's a couple of models that come into play here. And you'll hear about some of the models from the next speakers. So the first model is a self-funded search, right? So this could happen because you've saved up enough money and say, okay, I have $100,000 or $150,000, and I think I can survive on this for the next 2 years until I find a business to buy. So that's a self-funded search. The other aspect of this could be that you say, look, I have a full-time job, but I'm willing to spend weekends and I'm willing to spend my evenings on finding a business to buy. And once I find it, I'll give up my job and I'll find the money to fund this and grow it. Now, it'll be much slower because your energy is split. But this is a model in which you can do the search without taking on external responsibilities. The second model is a funded search, where you would go out and you would find either one of two, a single sponsor or multiple sponsors. So let's say Oscar and I were to put together a search fund. We would have, let's say, 10 or 20 units that we would offer to investors to fund our search. So this is called a search fund, but we would have 10 to 20 units, which we would offer to searchers, to investors who are typically ex-entrepreneurs, they're ex-searchers, or these are families that have sold their own businesses and fundamentally believe that there is an opportunity to build, to add to the world by transforming other businesses. So you would go to them and they would each give you, let's say, 25 to 30,000 euros for one unit. And you would be able to raise effectively 300 to 500,000 euros, which should pay for a few things, which I leave to my colleagues to go into. But essentially a few resources, some software, some technology, and a basic salary for you to survive on while you find a business to buy. What do they get for the money they give you? They get the option without the obligation to invest in the company that you find. And the structures in that, we don't have too much time to go into today, but we can certainly address slightly, are you would use bank loans, you would use grants, and you would use equity from your investors, but you would also take some seller financing from the person who's selling you the business. And this is strategic as well, because the person who's selling you the business, you need them to stay in the business, at least for a little while, because a lot of these businesses are really driven by personal relationships and by the founding families that built them. And this is the first time they're ever selling a business. So they might not know everything they need to transfer to you. So through this transition period where they have some interest in the business, they're able to give you that transition and you're able to sort of then effectively take control of the business. So that's how a funded search works. There is now a new model for searches, which in fact, we will be announcing something on Search Velocity, which is our internal platform in the next couple of months. But the idea is that you would be able to go to a accelerator or an incubator style platform, get access to the tools and the resources across a couple of searchers, and be able to effectively shorten the time to find a company that you would usually need. And you'd be able to reduce the costs by that you would need to spend on building a platform, bespoke platform, because there will be some economies of scale that are shared among searchers. The other aspect that's beneficial here is that you then get the opportunity to, within the next 3 months, 6 months, decide if this is even the path for you. Because typically if you raise money from external investors and you started the search, it is highly embarrassing and difficult to then go back and say, look, I'm not really going to do this anymore because I'm not seeing the kind of traction I want, or things have changed. So this will be a platform that can help you then achieve, test the model out and see if it works for you, which really works well for folks who've been in, who have other jobs. So think we jumped ahead to the next one. We can go into that now. Yeah, so very quickly, what is AugustOne's search focus? So just as I mentioned, AugustOne, we have a very robust search strategy. We've met with many searchers. We are speaking with two of the best we've met, or two of the top ones we've met over the last couple of months. Our focus tends to be more on Europe and Singapore. So we're looking for targets in Europe and Singapore. In fact, everything I mentioned to you on this slide is our focus, but that doesn't mean we cannot help you if you're looking for to be a searcher or to back a searcher or to be involved with a searcher. So you might want to partner with one. You might want to work with a company that's been bought by a searcher. We're happy to help you. We found some great resources. Both Marat and Tomas know the ecosystem. It's a very intimate community. People know each other. It's very collegiate. Everyone wants to help each other. And Search Funder is a platform which has been set up, which is similar in some ways to what AngelList used to be when it started. It's a very robust community. We encourage you to look at that, but also LinkedIn and individual searchers are so open and willing to help each other. This is what we've seen in the venture capital industry over the last 10, 15 years as well. But the search fund community really wants other searchers to succeed and they want to help each other. So please connect with other searchers. We'd be happy to help you do that. But from an AugustOne's perspective, we're really looking for targets in Europe and Singapore. We're looking within the FMCG value chain, which is not necessarily just consumer. It's also B2B. It's durables, non-durables. It could be fragrance companies, as I mentioned. It could be companies that make equipment for, I don't know, the dairy industry. It could be logistics companies. But we like to stick within the FMCG space. And if they have iconic brands that can create a moat, that's very interesting for us. Again, the companies we're looking have typically, and that number is incorrect, it should say 5 to 50 million euros in revenues and about 20% average EBITDA. Companies we like are companies that are typically 20 years old plus, because the average company typically, we know whether it'll survive or not in the long term after 15 years. So we look for companies that are about 20 years old. We like to understand what the seller's discretionary cash flow is, because with these early stage companies, EBITDA is not necessarily reflective always of their profitability, because if you're the owner of the business, your house is on the business's expenses, your car is, your holidays are. So we tend to look at seller's discretionary cash flow more actively than just EBITDA. And then we like profitability per employee, because this also shows us efficiency of the business. And also because of labor laws in many countries, you don't want a business that has thousands of employees, because it becomes difficult to manage, especially as your first acquisition. And then finally, we like companies that have low or no debt, because that gives us the opportunity to bring in some capital optimization. So the way we approach our businesses is we are very supportive of MBOs, management buyouts, because we like to back managements if possible. We're very supportive of search entrepreneurs, but typically search entrepreneurs that are looking within FMCG. And as you'll find out, most search entrepreneurs are not focused on industry. They're focused mostly on geography and on financials, which completely makes sense. So in that instance, we're able to support what is called an equity gap. So when they're doing an acquisition, if space comes up for a strategic investor like us, that is a family office that can support searchers in aspects way beyond just the financials, we would be folks they come to. And finally, we like companies where the searchers are individuals that we would like to connect to in the long term. So these searchers are also individuals who will become our partners, of course, when they buy the business. And eventually we'd like them to come with us and invest in other companies. So we look at it as a family ecosystem. We look at it as a support ecosystem across all the companies. And we would like to help, we would like to work with everyone in the ecosystem. And that's why we do events like these. And to be honest with you, this event also came out because we sent out a message on LinkedIn saying if there's anything we can do to help in these tough times where people are insecure about their jobs or are looking for new opportunities, we'd like to help. And a lot of the messages we got were pertain to entrepreneurship and alternate paths to entrepreneurship. And a lot of the folks who contacted us were folks who are at a point where they don't necessarily want to spend 5 years fundraising and building from scratch. And they really don't want to go work at a very large corporation because they want to balance their quality of life and freedom of time with what they want to accomplish as individuals. So this is where this talk came from. And I really appreciate Oscar, Valentin, and the team for putting this together.
Of course, very nice. Thank you, Samir, for that and for sharing your insights and presenting the fundamentals of entrepreneurship through acquisition. right? So now we will have the chance to mix these skills that we learned from Samir and tools with real life experiences. So there are two of the most impressive searchers, Marat and Tomas, that we have met at AugustOne, and they're here to present their insights. Right. So Tomas is currently raising the first traditional search fund in the Czech Republic and Slovakia. He learned about the model back in 2017 during his MBA at INSEAD, after which he ran a self-funded search. Close to acquiring a business, the seller finally decided to postpone the process, and Tomas took a break from searching while immersing himself into an operational role at Amazon warehouses. So before INSEAD, Tomas worked as an M&A operational improvement consultant and a data scientist. Tomas, would you mind to share your experiences with us?
Sure. Thank you very much, Samir, Oscar, and Valentin for organizing this. And thank you very much for the nice intro. I can talk about my story more specifically and about the market in Central Europe. But as you will see, I will touch on many themes that Samir already touched, and you can see that there are kind of similar patterns as he mentioned. So maybe I'll start to talk about the motivation, why I decided to do the search fund in the first place, because it is a big decision. You basically decide on what to do for the next many years of your life, and you have to commit to that. So there are three themes that I've seen over the years in my career. The first one, maybe to start with, is shift towards generalism. So this is something that is usually not the case for the professionals who have similar background as I do. For example, when you join McKinsey, they typically tend to tell you, find out what you're best at and work on that and become a specialist, right? And as my good friend likes to tell, you know, the ultimate specialist is someone who knows more and more about less and less. So ultimately, you know everything about nothing. But what I'm trying to say is I started the other way around. I became as this, I started my career as this nerdy kid who graduated from mathematics. I started as a data scientist. And then over time, I wanted to go more and more into operational improvement as a general theme. And over time, I wanted to go into strategy as well. And then I actually learned about some projects within the M&A and acquisition space. And I really fell in love with those kind of projects. And I like more and more to work on different aspects of the business and understanding more and more broadly what the business does. And over time, I realized I actually don't want to be a specialist, but I want to be some kind of polymath. So I know more than 80% of people about many topics. At the same time, I will never be this 1 percentile specialist in that topic, but for me, it's good enough. I just want to understand deep enough that I see the links between those different themes. So that's the one theme. The second theme was I realized I like smaller and smaller corporations. So at the beginning, I started with the big companies like L'Oreal or big consulting houses like Deloitte and Roland Berger in Europe and so on. And then I like to go into smaller and smaller companies. I work with some startups. I started a boutique consultancy in Dubai. And I find out that I really like the environment where you have more flexibility to actually focus on what you believe has the biggest impact for the company as a whole, not only within your small job description or within your narrow kind of focus, but for the company as general. And this is what really motivates me and drives me. And the third point was I just wanted to return home. So part of my career I spent in Dubai, and I love hiking. I like to travel a lot, and Dubai is a great starting position for traveling. But within the Emirates themselves, there is only a desert, so there's not that much to do in terms of hiking and so on. So over some time, I really became tired of that, and I just wanted to go back to Europe. And also I wanted to contribute back to my kind of home region and come back there. The question was what to do there, because there were not that many opportunities that would be kind of relevant for me. And therefore I was thinking actually I should start some company. But as Samir mentioned, I I had this kind of stereotype in my head that the entrepreneur has to be someone like, you know, Steve Jobs, like you have some super vision and idea in your head, and you know, you put it to the market, you bring the investors in, and you start with that. And honestly, that wasn't me. I mean, I didn't have any idea that I felt so strongly about. So I decided to join INSEAD to take some time to think about it, to meet some new great people, and learn about more stuff and fill some gaps I had in my knowledge. And during INSEAD, I learned about ETA, and it just clicked with me. I thought to myself, this is perfect. How come I never thought about this before? You can actually just acquire business and then manage it yourself. And actually, the more I learned about it, the more appealing it was, because when you look at the Central Europe, Czechia and Slovakia in particular are two countries within EU with the highest density of SMEs per 100 inhabitants. So, for example, double number of SMEs versus Spain, let's say. So although the markets are small, there is very high density of small entrepreneurs. The second thing is the countries actually transformed from communism to capitalistic or free economies in '89. And after that, many companies popped up, many entrepreneurs started, and those people are now in their late 60s, 70s. And based on the data, only 1/3 of them actually have someone to pass the business on to. So only 1/3 of them have their children or family or friends who they trust, and they want to leave the business to them. But the rest of them actually, you know, are so crucial for the company and have no exit option that once they leave the company will just kind of disappear. And that's another theme that I felt strongly about, that, you know, the search fund could kind of fill this gap, and I'm trying to support the environment in the Central Europe. So during the INSEAD already, I took the ETA class with Ivana Naumovska. It was a great class. I really enjoyed it. And I told my team, look, guys, if you don't mind, I want to do this for real. So let's focus on Czechia, Slovakia. I'm going to fly back and forth, get some brokers and so on. And if you want to do the search yourself, usually very quickly you find out that in terms of brokers, I would say the distribution of the quality of the brokers has very, very long tail. And there are only very few of them that are good quality ones. And the rest is kind of like cheap sales guys and not really bringing a lot of value. But I was super lucky that I actually found a really, really good broker who was kind of preparing the sellers very well and kind of mediating the conversation very well. And he had reasonable expectations and he knew how to manage them. And this one person, he brought me kind of 3 very interesting deals. And maybe it's good to say here that one of them actually ended up being acquired by another search fund that was a self-funded search fund in Czechia. It was called Continuum. It was Ivana and Corbin Butcher. Very smart couple, and yeah, now they are in tough times, but they are doing miracles with their company. And the second company I decided to acquire myself because it was a beautiful company. I got a lot of feedback on it, and you know, it was mostly good feedback, and I wanted to go forward with it. So at that point, I already had a company, so I decided to just go self-funded. Despite the fact that I had the INSEAD loan, the MBA loan, and I didn't really have like 100 or 200K that I could spare, but I felt I'm so close that I can just raise the money for the due diligence and for the acquisition itself. So at that point, I started to talk to investors, and you could see even locally, the investors are super interested once you bring them the company on a silver platter, if it's nice and you already did commercial due diligence and so on. So there was a lot of interest from the investor side. I got the investors, I got the banks committed. So we got several offers from the banks that were actually really, really good and reasonable offers. However, the structure was a little bit tricky because of some tax situation that the seller had. So I needed the help with it. And I asked for help, one of my investors, and basically once we started talking about more complicated structure, the seller got a little bit afraid and a little bit defensive because it was suddenly something that he didn't feel very comfortable about, and he started to feel like we are trying to trick him, and the conversation just didn't go the right directions, and it was all my fault. I mismanaged it, and at the same time I learned a lot. This is something that happens especially when you do the first couple of meetings or deals. And in the end, we decided not to go forward with the acquisition, because then he started to challenge the working capital levels, which is also a big theme usually in these small companies, to agree with the seller what is the reasonable working capital level. And we decided to walk away from that. And I was in a situation where I didn't have enough runway from my personal funds to continue. So I decided to basically take a salary for some time to learn something useful, but at the same time to kind of stabilize and then start again after some time. So I joined Amazon, and I worked directly in a warehouse in this program for post-military and post-MBA people. And I worked directly in the warehouses. I was launching a new one in Paris. I was working in one in Prague, where I managed hundreds of people. Some shifts, especially during Christmas and peak days, were as big as 1,000+ people. And I was responsible for that on both the human side and the process side. So it was very interesting, but after some time, you know, it became a little bit repetitive, and I decided I want to go back to searching. And this time I'm raising the traditional search fund. The timing wasn't very lucky on my side, because I resigned from Amazon in February. So basically right after everything in Europe got closed, and the Corona hit us very hardly. So I decided to switch from talking to investors to talking to searchers. And I spoke to many, many great people, including Marat, and I learned a lot about them. And I learned about also how they deal with the situation and so on, which was super helpful. I learned a lot about also the potential investors, which is something maybe I suggest you to do. I created this kind of scorecard of investors based on what searchers told me, and every investor wants to see it, but I'm trying to hide it so far. So yeah, that was very helpful. And after I felt in May that the situation is becoming a little bit better and we have a little bit more data, I started to raise again. And now I'm lucky to say that I'm becoming oversubscribed, which is always nice to have. At the same time, I am still a little bit too exposed to certain countries of investors, and I know that some of them like to collude a little bit, so I would like to diversify my investor base a little bit more. So I'm still looking for new investors, but my aim is to close my cap table until the end of July, and then make a capital call basically before the fall. So in the fall, I can start reaching out to the sellers and fully focus on search, because when you do raising and searching, you can do that, but obviously you cannot be super efficient in so many things at once. Now, that was more or less my story. Now, maybe the 3 things, if you are considering this, the top 3 things I would say are very important once you decide to start a search fund. Are the first one is definitely resilience. It's a very volatile journey. It's a roller coaster, and you know, some days you got 5 investors calling you like, we want to invest, and when can we start, and you know, here's my money. Sellers are reaching out to getting excited, like, you are exactly what I'm looking for. And some days you just shoot out 100 emails and you don't hear from anyone. So so you know, it's very volatile. So be ready for that, and you just, you know, have to keep going, and you know, you need to be mentally strong for that. The second one is, as Samir mentioned, the network is extremely close and extremely helpful. So anytime you need help, just reach out to them, and they usually help you, and they are very nice, and yeah, they are very responsive as well. For example, I'm raising in a kind of new region for the traditional search funds, because the 2 search funds that were in this region before were both self-funded. And the local investors take a long time to pursue it for the search fund model because it's something they are not familiar with. It doesn't really make sense for them at first. So what I would suggest you to do, because you are not in good position really to persuade them unless you are close to them, introduce them to your investors, to your kind of search fund investors that invested to tens of search funds. Tell them to speak to them, and they are in much better position to explain them the model and kind of sell them on the model. And then once they are persuaded about the model, it's much easier to just sell them about yourself, how you can actually make it happen. And the last thing maybe I would suggest is once, especially if you are in a new market, start early with the local investors and lawyers because the legal and local investment topics tend to take way more time than the rest. So I just suggest start with that early, and then I mean the earlier you finish, and you can actually start focusing on search and getting your salary and so on. So yeah, that's pretty much it from my side, and I'll be looking forward to any of your questions in the Q&A section.
Fantastic. Thank you so much, Tomas, for sharing your insights and also your 3 key points for future searchers, right? To the audience, by the way, feel free to write your questions into the chat. We will go over the questions in the end. So now I would like to move on to Marat. Marat here is also a very prominent searcher here. He learned about the search funds 3 months after his MBA at INSEAD, and it was the shortest and most sure path to his goal of building a successful business in the Southeast Asian region. Fascinated by this opportunity, he embarked on a 12-month self-funded search in Singapore. He assembled a team of carefully picked intern analysts from NUS to NTU, SMU, and also LSE, and analyzed 16 industries and 34 businesses before the end of the self-established deadline of 1 year. Before INSEAD, Marat was a successful entrepreneur with a group of companies present in several countries and totaling $30 million in revenue. Marat, would you mind to share your story with us?
Sure, Oscar. Thank you for introduction and thank you for this invitation. Thanks, Samir, for your great intro to Search Fund World. Thanks, Thomas, for sharing your story. And by the way, Thomas is one of the first searchers that I spoke to when I just embarked on my journey. Yeah, I will probably also start with background and motivation. So basically, I'm coming from a very small village in a very small country, a very poor country, Uzbekistan. I grew up there, got my bachelor's in engineering. Then I moved to Moscow when I was 20. And just in a couple of months, I started my own business with a couple of partners. And sure enough, first half year was very tough, no clients, no nothing. We couldn't do anything. Then we discovered something similar to Google AdWords. In Russia, it's called Yandex Direct, which is basically exploded our sales in one year. We were like 10 million revenue. In 6 years, we were 30. So it was an amazing journey. When I was 26, approaching 27, I sold my stake in a company and decided to what I want to do next. So basically, the smartest way to invest money is to invest in yourself. And I had a couple of friends who did MBA and did well after that. So I decided to embark on an MBA journey. And there was a choice of countries because I embarked on several schools, got in, but I chose INSEAD. It was #1 at that time, and it's an amazing school. And INSEAD has several campuses in Europe and in Singapore and Dubai. And I decided to go to Singapore because I wanted to live, first of all, in a country that is very developed. And second of all, I'm a big fan of LKY. I know people from Singapore will know whom I'm talking about. And yes, and Singapore is in Southeast Asia, the fastest growing region in the world. And I'm, as an entrepreneur, want to be in the part of that growth, you know. So I came to Singapore, spent a year here at my MBA, and after that, traveled around Europe for a month, came home for a month, and my wife actually got a good job in Singapore, so we decided why we love the country, we want to stay in, and I'm like, as an entrepreneur, I don't want to join a big company, and some of you will not be willing to join a big company if you have a choice for multiple reasons. And I don't really want to start my own business because I know how challenging the journey in the first years. It's like the first 2 years of my entrepreneurship were like 16 hours every 7 days a week, underslept, no socialization, no nothing. It was tough. So I spoke to several friends and I discovered this entrepreneurship through acquisition. And I'm like, this is the easiest and the most sure path to success, especially in a country where you don't know really the culture of the country, you don't know the business culture of the country, right? So what I did, I started, as I do with many things I'm interested in, I started reading like everything I can find on it. And there's a lot of information you can find and it's free. And what I discovered is the returns are just outstanding. With those familiar with the financial terms, IRR is 31% on average. It's just outstanding. There is no such IRRs in the world. Like VCs is 16%, PE is 18%, here is 31. And the success rate is just crazy. It's like 49% of people succeed. And by success, I mean they don't fail. So it is, in entrepreneurship, if you start a startup, your success chances are like mostly, maybe 5% if you're lucky. But here's like 10 times more. I'm talking about motivation. The other part of the motivation was that I wanted to do business here in this region. It's the fastest growing region. The opportunities are here. So, and it aligns with that part of my motivation too. So I'm like, I will try that. Especially a couple of my friends already were doing that after MBA. And I'm like, this sounds really good. So I started the journey. And what I did, first of all, I spoke with a lot of searchers, maybe 20 or 25 of them. I spoke with a lot of investors, definitely more than 30 of them. And I learned a lot of interesting insights. Let's say Thomas, who spoke just before me, he gave me an amazing insight to connect with Big Four, with private equity professionals to get the deals from them, which is pretty doable, and it's an amazing source of deals. I spoke with other guy who told me how to manage interns and how many you can have them. He had 8. So at the beginning, I wanted to do like 8 interns, and I started assembling a team. I probably interviewed more than 200, shortlisted more than 200, interviewed probably around 40 of them or 50. And in my team, there was 7 interns at a time. At all, it was 9, but you don't have them for a long time. So usually it's 2-3 months here in Singapore, sometimes 6 if you're lucky. And I assembled a team of very bright people from NTU, SMU, NUS, Dean's List, first class honors. And oh my God, these guys are just amazing, guys and girls, by the way. They did tremendous things. At some point in time, I had like meeting every day of a week, which for such small country as Singapore, for such limited number of businesses is just outstanding. I was very fascinated by that, but sure enough, it didn't last long, because when you have a person for 2 months, he starts to perform at around 6 weeks. And after 2 weeks, internship is over. So it is also one of the insights I have. And I discovered a lot of cultural insights about Singapore, because I'm not local. And for me to buy business here, it's a big risk and big challenge. And managing local people, talking to local businessmen, and I met with more than 20 of them and spoke with them for quite a prolonged time. It is quite insightful. And other part of the search, which is very important, is building the network. So I spoke with a lot of people from private equity, from investment banking, and also the people who specialize in that, right? The brokers who can bring you the deals. In Singapore, there is not that many brokers, but there are some, and some of them are good. So they were bringing also some deals, which is really cool. So I set for myself a target for 12 months, because I understood that Singapore is such a small country with limited number of targets. All my calculations told me that in a year, I will definitely search through all the industries I want to search through. And we did that perfectly well in that timing. But after searching for that time, I did two two due diligence sessions with two businesses. One was very promising. We went quite deep into due diligence, but then I discovered a couple of really red flags and decided that my time is up and this business is not going anywhere. So I transitioned to traditional entrepreneurship. I have a business here now in maritime industry. I'm pretty happy with it. So I will probably finish much faster than expected, not 15 minutes, but probably 12. So let me tell you about 3 lessons that I learned during this journey. First of all, as Tomas already mentioned, the motivation, the perseverance is extremely important. The journey is so tough, so rough, that sometimes you have, like I said, a meeting, 5 meetings in a week, one day after another, and it's outstanding. And sometimes you have none in a month or maybe more, and it's very demotivating. And one part of the motivation is you can partner with somebody. You don't have to go alone in the journey. And sometimes people partner up together. And I spoke to partners, and it's easier because I had in my previous business 2 partners, and it's a cool feeling, not for everybody, but for me, when you come into the office in the morning and you can discuss the challenges and you can bounce the ideas off each other, and you charge up with motivation. But when you're alone, you can find another sources of motivation. Let's say your investor base. It's an extremely good source of motivation. You can speak with them, we can bounce off the ideas. And the other source is another people you work with is your interns, your analysts. It's also a great source of motivation because they are kind of also vested into the journey. And it's also one way to push through this journey. The second learning point is go out and talk to people. It's probably the most efficient thing you can do on any stage of the search. When you start the journey, you go out and talk to investors, you talk to searchers, and everybody, not everybody, but absolutely like 90% of them are open to talk with you. And it's extremely, extremely interesting. I still have notes of my talks with every one of them, and just this morning, because Thomas is here, I just looked at this notes and I'm like, yeah, this guy told me this stuff, and it's very, very helpful. So go out and talk to people. Let's say a couple of deals I found was just going to an SME event. I remember one organized by OCBC, and there was a Tamil woman, and she was a advisor to SMEs, and it's an amazing opportunity to exchange the deal flow, and to discuss many issues. That's really cool. And the third one is probably if you hire interns, and I encourage everybody to hire interns, and if you do that for a longer period of time, because for me, I started with 2 months, then 3 months, then 6 months, and the 6 months was the most efficient. 2 months is too short, even if he's or she is extremely bright. It's just the learning curve takes at least 4 weeks or maybe 6 weeks, and then just don't have enough time for getting good results. And that's about learning points. And if you decide to embark on this journey, explore all available information. As I said, just read about it, and then reach out to people and talk to them. Only then, when you have the knowledge, you have the understanding, the basic understanding of it, and then speak to at least 20-25 searchers and get as much insight as possible. They're all open to share information. Talk to searchers in the countries that are similar to yours. Let's say when I started search in Singapore, and I spoke to people in this region mostly, Philippines, Australia, New Zealand, Singapore, etc., Thailand even. And you learn a lot, and this information is more specific and closer to your region, which is good. Yeah, probably one of the most important points, have a dedicated investor base. If you want to go with one investor who backs you, make sure this investor is, first of all, vested in your success is extremely important. Sometimes you have investors who are not interested not really interested in your success. So you have a call like once in every 3 months, it's not enough. And because they will help you, they are carrying this knowledge and this experience. And second of all, have these investors not only vested in your success, but also have the experience in the field. Either they have people who with the experience from the search fund world, or this person was a search funder in the past, which are the majority of investors in this world. It's a quite neatly tied world. So that's probably all on my part. I wish everybody, just go and do it if you decide to do it. It's an amazing journey. You will definitely love it, and talk to people, go out to talk to people.
Fantastic. Thank you so much, Marat, for sharing your story. I'm sure your story inspired many future searchers as well. So now we'll head into the Q&A section, where you, the audience, you will have the chance to ask your questions by submitting them into the chat. Right. So I would like to start off the Q&A with a question to all three of you. Every one of you is an established entrepreneur and lived through diverse experiences. However, when was the first time in your life when you thought, okay, I want to become an entrepreneur? Maybe Samir, you can start.
I think, Oscar, you were asking this question earlier, and my response always is entrepreneurship is an affliction. It's not a choice to a large extent. You can't help but be an entrepreneur, and everyone will try and convince you otherwise, saying take a job with Amazon or whatever have you. So it's an affliction. But I think the trade-off that an entrepreneur makes is saying that I want freedom of time and I want freedom of quality of life. The only thing that is secure is that you will be able to choose to a large extent how you spend your time. Everything else is not sure once you made this decision. So you don't know if you'll get paid. You don't know if you'll have a job tomorrow, although you don't technically have a job, so you don't have a job. You don't know if your clients will pay you. You don't know if your business will exist. So for me, the first business per se, I would say I started is when I was 13 and with some friends, and we used to try and sell comic books. These were physically printed books, if you don't remember, most of the people here that had graphics in them. And then we started a business in college where we used to make laptops. This was in the 90s. We would make laptops and we would sell them to other students and provide them free services. So it wasn't a decision that was an overnight decision. It was really something where I made a decision saying that, just like Tomas mentioned, where you look at things and they're not efficient, and you look at processes and you say we can do it better. And then as part of a large ecosystem or a large structure, a lot of times you don't have that freedom to make those changes. And I hope at AugustOne and at our companies, we've created a system where everyone has the freedom to change things if they feel there's a better way of doing it. But typically, most entrepreneurs, if you look at it in today's world, come from a mindset of problem solving. They're either engineers or they've gone through a structure where they say, look, I can do something better, more efficiently. And it's not the money that drives you. It's really the need to do things in a way that's better than has been done before. So for me, that was really the driver, and it continues to be the driver. And I'm not just saying it because you and Valentin and everyone are here, but what keeps me an entrepreneur is the excitement of working with extremely high potential and extremely intelligent people. You know, every day I learn something new, and I feel like if everyone can just share what their ideas are on things, I'm smarter at the end of the day. So as an entrepreneur, you have the freedom to do these things, and you can change directions if you want. But I'd be very curious to hear, because both Marat and Tomas are great entrepreneurs as well. I'd love to hear their thoughts on this.
Great, thank you, Marat. Would you like to continue?
Yeah, that's actually a great question. I haven't thought about it, and I was thinking, do I identify myself as an entrepreneur? Probably, it's very difficult to say, but probably I would rather say that I'm an experimentator rather than entrepreneur. And entrepreneurship is amazing in many sense, because you have such a freedom as an entrepreneur, to your action, to experimentation. You have a freedom to hire people and surround yourself with people that you like and people who are capable to deliver results. you learn every day, which Samir told, and if you surround yourself with the right people, this journey is just amazing. You can't imagine anything better than that. Because I started in a business which was very random, and then I decided to build another company in our structure in a group, which I had it as a CEO. I built such an amazing team. People were so happy, and coming to work every day where people are happy and you're delivering results and you're making money, and it is just such an outstanding feeling. So entrepreneurship is an amazing way to live your life, but I'm sure it's not for everybody. Some people are just willing to be more in a comfort of security that a big company can provide. And being entrepreneur, you're also always stressed. You always have not enough money. You always have not enough clients, and this is definitely not for everybody. And maybe not even for me for the whole life. Maybe sometime I will decide to switch. But at this point in time, I'm still young. I still can do it. Yeah. Thanks.
Great, fantastic. Tomas, what are your thoughts?
Great. So maybe I'll just build up on what's been said already. So I agree the freedom is the major and great thing, but at the same time, with the freedom comes also the huge responsibility for all your employees and in the end, your family as well. I think that's the point where, like most people are just not really comfortable with that. Because I think when you look at most people in corporate jobs, actually their main role is not to really increase performance, but they are not more focused on decreasing risk, which means that you are kind of resistant to any changes or major changes. But then as an entrepreneur, you actually have to embrace risk because change is your everyday life. And if you are so passionate about something that you want to make it work in the long term, everyone's going to die in the long term if they don't change, right? So you kind of have to embrace that, and that's kind of really scary. But I think it's also, in a way, acquired taste that you can kind of learn it, how to do it. But it takes some time, and some people I think are further mentally in the direction of entrepreneurship than others. For example, based on if someone in your family is entrepreneur and you've been seeing them your whole life, and you're more familiar with that. But some people, they have maybe more traditional parents, and for them it might be more difficult. So I think it's very personal choice that is not for most people, but it has tremendous benefits once this is something that you feel excited about. Just listening to this, then I would say for sure you should try to explore it more, and it might be very rewarding for you in the end.
Fantastic. Thank you. So, Tomas, maybe one question directly to you, because you're in a search right now. What are the main factors you feel like make the difference between a successful search and, let's say, an unsuccessful search?
Okay, so I can talk about raising, and I can talk about search then separately. So currently I have more experience and more recent experience in raising. Obviously there are two things that investors mainly look at. First is you, because if they don't believe you can make it happen, then everything else is just irrelevant. And the second one is the market. So for me, the market was the challenging part, because Czechia, Slovakia are not huge countries. Also, not that many investors are familiar with the markets. So it takes some kind of data-driven persuasion to show them why it is a good market and good timing to invest into it. Now, on your personal side, obviously, it helps to have some operational experience as well as deal experience, but it's not a must. And like I said, for most people, I think the drive is the most important, because like we mentioned before, the persistence or resilience is the number one, I would say, a factor of success. So just make sure that the investors see that. And I don't remember who it was, but someone told me once that be humble about everything, but be confident about one thing, that you're gonna make it happen. That's the only thing. Like, you feel confident that you can make it happen, but everything else, just be humble about. And I think what is kind of difficult also in the search fund is you have these like two big mental switches. So first one is you raise the search fund, where you kind of go from investor to investor trying to raise the money. But then suddenly you establish a search fund and you run it. And it's a very different thing suddenly from someone who raises the money. You become an investor, and you reach out to companies and basically try to persuade them to sell it to you, and basically show them that you're credible and you know what you're doing. And the last phase, or like the second shift, is actually operating the company. So again, from the investor, you become an operator, and that's also a very different thing. So so just be ready for all these things. And I think for both raising and search, that might help. For the search, I only had very short experience in a self-funded search. So for that, probably Marat might be the better person to talk about it. But from my short experience, again, it's mostly about persistence, because some days are just good, some are bad, and it's great to create some kind of deal flow and some kind of system how you deal with everything. But at the same time, it's a lot about timing and luck. So sometimes you get a lot of great companies at once. Sometimes you get nothing for several months. And looking at some searchers, for example, I know about several searchers in one country. Some of them haven't managed to find anything within 2 years, and some of them found something within the first 3 months. And I don't think it necessarily says that one is better than other. Sometimes it's just about luck. And in the end, even if you find someone, then in this kind of segment of companies, the sellers also tend to be way less transaction oriented and way more personality oriented. So you go there and you have all the perfect CV for this job, and they are a perfect company. But if the seller doesn't like you for any reason, then it's very difficult to make it happen.
Fantastic, super. Marat, the next question is for you. In your story that you shared with us, you also mentioned that you hired many interns, right? So how do you decide what interns or also associates you take on? What are the criteria for you?
Well, that's a very good question. Actually, I approached it very systematically. I had a system like Tomas mentioned. He had an assessment system for investors, which I never thought of, which is amazing. I had the same for interns, and for interns, I had 4 major points. And the first one was his intellectual abilities, because I need smart people to get up the speed very fast, The second was his leadership abilities. For some reason, I wanted to see people who can lead others. If I want to form a smaller groups of interns, and one bright and capable to manage others can gain this experience of management, at the same time help me to enlarge the base. The other one was his abilities, his knowledge in finance, because we need to analyze deals. I'm not a finance person, and I need people who learn, who know the finance quite well. And I had guys with CFA, etc. And the last one, I don't remember the last one, but that's probably the system I approached it. And I had a scoring system, if somebody gets through the threshold of 3.5 out of 5, so it's
Nice.
kind of an average of all, I get this intern on board. I first interview him, definitely. And then there's another system of assessment, and then you go in.
Great. Sounds like a really good system. So the next question is for both of you, Tomas and Marat. We've heard a lot of professional reasons that make starting a search fund attractive, right? But what are some personal factors that impacted your decision to start this journey? What are also some concerns that you had?
So I can maybe start with the personal reasons. I mean, we touched on that in what makes you want to be an entrepreneur. Basically, over time, like if you work in the corporate, you always have a boss, and And when you're an entrepreneur, you also kind of have a boss. Like everyone is your boss in a way, because you have a board, you have your employees, you have like a public or customers. But in the end, you have way more freedom in making the decisions, and you bear the whole responsibility of those decisions. But in the end, you are the one making them. And for me, especially as I became more and more senior, it became more and more painful having to make decisions that I disagreed with, but I just had to go with the decision of, let's say, my superior. And that was like on my personal side, that sometimes it was very painful for me, and kind of like just pushed me towards entrepreneurship more and more. And what I was obviously afraid of is, what if I find company in the middle of nowhere, and then I'm gonna live there, because you have to live there. I mean, you have to be with the company, and then like you live in this village, and how is life gonna be there? Will you really be satisfied living there? Besides the company stuff. And some people can switch to searching. For example, I know one person that only looks for a company within Prague, for example. So they very restrict themselves in terms of region. But investors don't like to hear that, obviously, because you restrict yourself a lot. But you can do that. If the cities are big enough, you can do that. The other way is you just find a way for yourself to make it work. And it might be obviously difficult if you have a family, and for example, you have kids that go to school somewhere, and you have to move suddenly to a small village somewhere, and like you cannot provide them that quality of education there. So probably it's only you who's going to move there. That might be tough, but those are all the personal decisions you have to balance in your mind, and whether it makes sense for you.
Very nice. Thank you for sharing. Marat, what are your thoughts on that?
Yeah, thanks for the question. For me, if we're talking about personal reasons, the first one, as I said previously, it was that it was aligned with my overall goal to grow business here, to manage business here in Southeast Asia. The second one was I just love the community. When I started speaking with searchers, with investors, and everybody is so friendly, so helpful. And I just never experienced that. And I'm like, wow, that's really cool. And I want to be part of that. The third one was I could afford it, because I started a self-funded search. And to raise money in Singapore, in such a small country, it's very difficult to raise money. It can take up to 1 year. I know people who raised for 1 year and couldn't raise it for new geographies where traditional search fund model is yet unexplored. So I estimated it would take too long to raise money. So I had some, because I sold my business some time ago, and I decided, why not try? It seems like everything, fits perfect. And the challenges is, the first and the most important is it is a lonely journey. If I were to start it, the second time, I would probably partner up with somebody. It is very, very tough to bounce up when there's something happens that, and it happens like every day. So it is lonely and a tough journey. And the second challenge would be, I started it in a country where I didn't know the business environment, didn't know how to manage people. I learned a little bit on my interns, etc., etc. But do it in your country. Do it in a country with the culture that is close to you. It would be much, much easier. And the third one would be the whole concept of search funds is of buying a company that is not kind of a digital, it's not sexy, so it's a boring company. So when you look at these boring companies from the inside, especially doing the DD, sometimes you think, do I really want to manage this company? So think about it too. Yeah, these are the challenges.
It. Thank you very much for that, Marat. We have a question from the audience, from Ankit. The question is, could you highlight a few approaches for a searcher to sell a search fund model to investors who do not know about this model at all?
So I posted a link there for the blog of Jake Nicholson, which is a great person doing this a lot for the search funds and for the community. But I think one thing that I would mention that is not there and is very important is like I said before, I think the most powerful thing you can do is introduce them to one of your international serial search fund investors, because to be honest, they are very, I would say, easy to approach, and also many of them are very helpful in any way, and you know, they are much easier to persuade to invest. So once you get at least one, then just ask them if it's okay that some of the local potential investors can speak to them. And once they do, it's way easier for your investor to persuade them that it makes sense than for you, right? Like, you are in very different position in both terms of power and you know, experience and so on. So I would like to highlight that. And also there are other points that are mentioned in the article, maybe just quickly summarize. One of them is there is actually a lot of data on search funds that prove that it works. So although the concept might be strange to them, you can always send them the Stanford or ESS study, or, you know, you can at least like highlight the numbers and tell them that you can send them the source if they want to. And yeah, I guess like those two are for me the best sources. And obviously something that from that data that you can say is, I don't like that sentence too much, but at the same time, some investors might listen to it a lot, is that basically historically the search funds had double IRR versus private equity or venture capital funds on average, obviously. So of course there are some outliers, and for the investor, especially if it's a new investor, it does make way more sense to invest into several search funds because this is like average return, but at the same time they have to start somewhere. So.
Fantastic, super, thank you. Samir, would you maybe like to add on this question?
So I think Tomas, you're absolutely right, and I think one of the aspects that's very key here is that the search fund community is still very small, and a lot of the folks who are in the search fund community are entrepreneurial, if not entrepreneurs themselves. Our approach to it has been slightly different because we come from a family office background. So a lot of our families have sold businesses in the past, so they've been the ones exiting to others. So they understand how one side of the equation works. But if you're approaching someone who's never done a search fund investment, I tend to feel that the way to get them excited, of course, it depends on what their incentives are. If they're a purely financial investor, you might need some of them on your cap table, and of course, Marat and Tomas can have more inputs on this. But you want some people who are purely financial, but at the end of the day, you want people who are not just going to fund your search, but they're going to be able to provide you the skills, the opportunity, the network, and the capital. Like, I'll give you an example. From our side, we see a ton of deal flow. So between Valentin, Oscar, Alex, Shivan, and all of us, we've probably seen, just in the last 1 month, we've probably seen like maybe 20 or 30 different types of searches, right? And from that perspective, we've also seen a lot of deal flow in terms of MBOs, in terms of spin-outs. We've talked to brokers, we've talked to a bunch of people. Now, we don't intend to go and buy these companies and run them ourselves. So if we know the right searchers, we're happy to direct these companies to them. So that's on the opportunity perspective. From a capital perspective, one of the things that's unique about the search fund industry is people are very happy to share their cap table with you, because it's like a fund, right? So you want to know who are the other investors going into your fund. So, and there's a bit of a herd mentality, but more than that, it's validation. So we spoke with a searcher out of Estonia, very, very sharp searcher, and all the searchers know each other because a lot of them are from INSEAD in Europe. And one of the folks on his cap table was someone we knew from INSEAD from 5 years ago, because he was the president of the Family Office Club. So because we know this individual, we also know that we can call them up and get their advice on this person. So I think the collegiate aspect helps you from a capital perspective. Next is skills. So you want your investors to know, to have the ability to do things like transition services. A lot of times when you buy a business, a major element of buying that business is transition services, whether it's transition services from the owner, or transition of IP, or transition of manufacturing contracts, and so on and so forth, logistics, warehousing, many things. So if your investors have a background in operations, or they have a background in transition services or legal aspects of the deal or transactions, they will be a lot more helpful to you than someone who's only going to give you a $25,000, $30,000 check, and then you really are on your own. Then it comes to also network once you've bought the business. So you want investors on your cap table and involved with you who'll open up opportunities for you to optimize your cost basis, to help you recruit the right talent. Because look, as Tomas mentioned, you might end up in a small town in the middle of southern Germany or somewhere, and you're not going to be able to attract the kind of graduates that the criteria that we're mentioning, who are the top of their class and dean's list and all that. So you need to have credibility from investors and others through the network to be able to get you access to this kind of talent, but also in terms of contract clients, customers that you can sell to scale your business. And a lot of times with these family businesses that you're buying, because a lot of times you're buying businesses from families, other families from that region are great investors for you. Because no matter what we say, business is personal. And especially at this level, it is very, very personal. And that's why when we select a searcher, the most important thing for us is this someone we want to be in partnership with at least for the next 10, 20 years, and hopefully beyond that, where they come back and become our partners and invest with us in other firms. So I think there are various aspects to it, but when you're looking for an investor and you're trying to explain to them why they should invest in you, rather than the search fund concept is academic, you can explain that to them. But you have to explain to them why you're the person they need to back, right? And then you also need to explain and share with them why the opportunity to acquire a company and run it is exciting. And having said all this, the thing that makes it easier is you're actually selling them the ability to do a deal, rather than going to them and saying, I'm raising a $100 million fund and I might invest in anything and you'll have no control over it. So actually raising money for a search where you're an entrepreneur they connect with is significantly easier than going out and raising a fund. And believe me, we've been on both sides of this, all sides of this equation. So I hope that helps.
Perfect. Thank you, Samir. There's another question from the audience that is directed to you. So Jackie Ramos asks, how can one join the Rising Stars Fellowship with AugustOne?
Okay. So it's not directly related to entrepreneurship acquisition, but the Rising Stars Fellowship is it's a group of individuals around the world that the AugustOne partnership works with and gives them access to skills, opportunity, network, and capital for the rest of their careers, with the understanding that they will do the same for the next generation of rising stars. Now, it is quite likely, and it is happening right now, where we would like to back individuals who are rising stars to go and acquire companies to run. But it's not a business-oriented fellowship. It's focused on qualities of leadership, on citizenship, and the need to invest in good for good. So we're happy to have a separate conversation, but it's not a application process. It is a fellowship that selects through the network, is what I can say, but we can have a separate conversation on it.
Right, super, sounds good. Maybe for the final questions, since time is running out. So this question is for all of you, and maybe you can all give a short answer to it. So Marat, Tomas, and Samir, what is one point, if you had to choose, one point that you would share with potential searchers to keep in mind before starting their search? Maybe Tomas, you can start.
Okay, I'm thinking about the answer. Mm-hmm. One point. I think the most important point is if you decide to do it, then just realize that this is not like choosing a job, because you can quit company anytime. But once you want to do a search fund, and probably if you want to do it, you want to be successful. That means you're going to acquire a company at some point. You need to realize this whole journey might take 10 years in some cases. So just be ready that this is not something for the next year or two, but this is something that's going to probably define a big chunk of your life. So yeah, it's a big decision to make. And me personally, I was very excited about it, but I think it's important to realize it, because sometimes I feel like people don't fully realize it.
Thank you for that. Marat, what are your thoughts?
Yeah, my thinking is probably the most important thing that I would mention is, never stop. Once you started and you have a certain timeline, if you raised money for that for 2 years, whatever, and never stop, because there will be challenges. There will be times when you don't want to do it anymore, but find ways to motivate yourself, find ways, talk to people, start and do it every day. Just go and do it, never stop, because otherwise it just will not work.
Fantastic. What do you think, Samir?
Yeah, so I think both Marat and Tomas, I'm going to borrow from both of them. I'm going to say there's a personal side of it and a professional side of it, and they're both linked because this is a very personal journey. So one of the things I'll say is make sure you're personally in a point with your relationships, with your family, with your friends, and as an individual, where you can commit 10 to 12 years to something. Now, you never know you can commit 10 to 12 years to something. So that's the issue here. But you want to be completely careful that your partner, your children, or your parents, or whoever it is that you're most concerned about, are willing to commit to this with you. It's not an individual journey. It's a journey that's beyond just you as an individual. And this actually applies not just to search funds, but anything that you're going to commit to for the long term, right? The other aspect to this is what Marat said is, and I'm going to rephrase it, that you need to have discipline, and you need to think of it as an infinite game, right? So this is not something that is just binary, because like we're seeing in Tomas's case, he started, found a company, decided not to do it, came back, he's doing it again. Marat started, went through the process, he's now helping the whole community. He's helping us, he's helping Tomas, helping everyone, right? So the key here is that once you're in the community and once you've started, you have to have very strong discipline for that 1 year, 2 years, but even beyond that, because this is cumulative skills that you're building. So when you start looking for companies and you're looking at them from the perspective of how can I make them better, how can I have a stake in them, and how can I make a career out of this, I think you have to be disciplined. You have to get to work. You have to, or work from home as today's situation is. You have to work with smart people. You have to take a very structured approach to it, and go at it from the perspective of saying, look, I have to give it certain timelines and deadlines, but it's something that I cannot. So people who do this on the side, I find it quite difficult to do. It's not impossible, but it's difficult to do. So really, again, to summarize, on the personal side, make sure that you've got everyone enrolled in your decisions from your family and people you care about. And on the professional side, be extremely disciplined and realize that it's a longer term game than just the 6 months or 1 year. And when you've raised the search fund, the game has just started.
Super. Thank you, all of three of you, for answering this question. That was very insightful. And now we have also come to the ending part of this event, actually. At this point, I want to thank the audience again for joining us. And I also want to give a big thanks to Samir, Tomas, and Marat for sharing their expertise and insights with us today. It has been an extremely insightful event for me, and I think for the audience as well. And also today is only the first event of our Fireside Chat series. And we're happy that so many people have signed up and joined us from around the world. So including Singapore, with people from Germany coming in, Italy, Switzerland as well, and many more. And also in case you want to connect with us, Marat or Tomas, you can drop us a message. You can see our LinkedIns on the presentation and follow also our social media pages. If you're also currently establishing a search fund, you can go to our website at AugustOne and click under contacts and submit a search fund application. We will also be publishing links to a bunch of material on our website in the perspective section. Furthermore, in case you're interested in the presentation slides and reading video and also podcast resources for entrepreneurship for acquisition, you can drop us a message on our Instagram account at risingstars.81. Again, it's risingstars.81. Super. So thank you everyone for attending, and I wish all of you a great day. Bye-bye.
Thank you. Thanks everyone. Thanks Marat, Tomas, Oscar, Valentine.
Thanks everyone. Bye.